right, Katie. So yeah, I'm ready here. I think we can start the session.
Okay, so Blink, are you ready as well?
Yes, I'm ready.
All right, so since we are already live, guys, of course, first and foremost, is welcome everyone. So, welcome, guys, to Crypto News's AMA interview for today. And today, guys, we want to discuss an increasingly important topic, and that is the AI market making era, how MEXQuick enables ordinary people to access institutional grade liquidity. So, guys, in the past few years, the underlying technologies of the crypto market have been rapidly evolving, right? We have seen from matching engines to multi source codes and now to market making models. So, AI is gradually being integrated into this core processes. And of course, Max Quick has chosen this moment to focus on AI driven market making, which has attracted significant attention in the market today. So, for today's interview, guys, we're going to be joined by Blink, the CMO of MaxQuick, to discuss this topic from both a technical and market source structure perspective. And of course, alongside Blink, we're also going to be joined by Lovely, the platform security advisor. So, firstly, let's pass the microphone over to Blink. Hi, Blink.
Thank you so much, host. See, if I had to describe the changes in the crypto market over the past year in the simplest term, I would say liquidity is shifting from being manually driven to being model driven. In our team research over the past years, we have continuously tracked debt structure, order flow, hedge delays, and cross exchange spreads. It's like a price discrepancy between exchanges. The further we look, the clearer the trend becomes. In mainstream trading pairs, action like debt filling, risk balancing, and inventory adjustment are increasingly being held by intelligent model rather than manual judgment. To give an example based on public data, let's say Keiko liquidity report back on 2024. It states that model-based order now accounts for over 70% of the mainstream trading pairs. Wintermute and GSR, for example, both mentioned in interviews these years that the involvement of AI model in daily market making decision is continuously increasing. And chain analysis market structure reports points out that with the increased fragmentation of liquidity, market making efficiency is increasingly reliant on automated responses. These data points provide a clear direction. Intelligent market making is becoming the standard infrastructure of the market. So, in today's EMA, I will focus on three key questions. See, number one is what is the specific roles of AI market making in market structure? Number two is why are institutions accelerating the adoption of model-driven liquidity? Number three is how can ordinary user participate in liquidity layers through MaxQuick? See, we'll cover this from the perspective of structure, data, and mechanism, aiming to explain it as clear as possible.
Thank you very much, Blink. I think that gave us an overview on what to expect on this AMA. But of course, before we get into the questions, the key questions that will really enlighten the community, let us first pass the microphone over to Lovely so she can also say her regards to the community. So, hi, Lovely. It's very great to have you.
Hi, guys. Thank you so much for being here and for inviting me here in this incredible platform. And today I come here as a platform security advisor. I have like an immense experience on this regard, and I'm really excited to like share my experience over here. So yeah, let's get started.
Thank you.
Thank you so much, Lovely, for that. Yes, once again, the community is very pleased to have you, Blink, and Lovely offer to this interview for today. So let us get into the questions because I know that these are the main keys that will allow us to explain and enlighten the community about our important topic for today. So, for the first question, guys, what exactly is the role of AI market making and market structure?
Okay, from a market microstructure perspective, the core task of market making can be broken into three parts. Number one is providing the depth, meaning how dense the order are at the different price levels. Traditional market making relies on manual adjustment, but in a multi-market, high-leveling environment, human can no longer react fast enough to real-time order flow changes. And number two, balancing risk. A maker's inventory naturally keeps drifting in one direction and must be hedged almost instantly to maintain a natural risk exposure. The more delay, the higher the cost is. Number three is ensuring price consistency, meaning the fair price across different trading venue, cross exchange spread must be detected and corrected within millisecond. See, the role of AI market making is to model all three tasks. It doesn't try to predict market direction. It works to maintain structural stability. This explains why Keiko's liquidity report back on 2024 it shows a sharp increase in model-based order in major trading pairs, and why institutions like Wintermute and GSR publicly mention that AI model now handle a large share of daily market making decision. Based on industry data as a whole, AI has already become a key underlying component in maintaining market depth and price consistency. So there.
Right, yeah, got it. Thank you so much, Mr. Blake, for such a incredible, clear breakdown. You're totally right on that. And actually, this gives everyone a much deeper, like, appreciation of like how invisible but essential market making actually is. And I really like how you framed it. AI is not here to like predict pump, but it is here to like could see keep the market structure stable by handling debt, risk, and even cross value consistency and at a like speed human simply but can't match anymore. And other than this, thank you so much for putting in such a like a digestible way. It really shows like how critical AI driven market making has become in ensuring fairness, stability, and deeper liquidity across the entire ecosystem. So yeah, thanks for that.
Thank you as well, Lovely. And of course, thank you, Blake, for all those important points. And once again, we'd love to thank Lovely as well for that additional add up on the security standpoint. Now, Blink, from that previous answer you gave us, you mentioned a very important point, and that is more institutions nowadays are handing market making actions over to models. So, Blink, from your research, why have institutions significantly accelerated their adoption of model driven liquidity in the past 2 years? I mean, what is the reason behind this shift?
Well, for what we observe, there are three main pressure-driven institutions to adopt model-based market making faster in the past 2 years. Number one is speed. You see, the market move extremely very quick right now. Manual order placement, rebalancing, and hedging simply just cannot keep up with it. A delay of even just a dozen milliseconds can impact the profitability of a market maker. Number two is scale. Depth changes across major asset exchanges and perpetual market now involve massive amount of data. See, human just cannot process that many layers of information simultaneously. Three, risk structure. Market maker used to rely on experience to hedging positions, but under today's high volatility condition, human judgment become unreliable while model provide more stable and consistent responses. With these three pressures stacked together, the shift in market making method is inevitable. It's not that any specific institution suddenly decided to use AI. The overall piece and structure of the market are forcing market makers toward the automation. So
I totally agree
I'm
with
going back to the security advisor here.
Thank
I
you
would
so
like to
much,
hear from
Mr.
your
Blank. Yeah.
perspective. Yeah.
Thank you so much for that. And to be honest, that explanation really captures the reality of today's market environment. And I agree completely. Like, like this shift was not driven by hype; it was like driven by necessity, right? And when market are moving at could say millisecond speed across a dozen of value, human-driven market making just can't like keep pace anymore. And the thing that you just highlighted, the three pressure perfectly, that really captures the market situation at this moment on regard of speed. That's the reaction time now determines competitiveness, right? Other than this, in regard of scale, the data load across assets, the perpetual market, and even the exchanges is simply beyond human capacity. And other than this, the one thing that I would not forgot what that one, the risk structure, the volatile condition are like a punish emotion driven or experience based decision, whereas the model keep consistency. And what really like about your point is that it really shows like how institutional behavior changed because the market structure itself changed. So yeah, that's really incredible. Thanks for highlighting that point.
Thank
Thank you very much, Blake, for all of those details. And of course, thank you, Lovely, for amplifying to everybody the main point that we have gotten from Blink's explanation. And like you guys mentioned, it really sounds like the shift in market making methods is being driven by the market structure itself, right? Rather than a conscious choice from anyone's party, right? And now, guys, having mentioned that and having explained that to the people, since institutions are accelerating automation, we would also like to turn to the other side of the equation, which are the ordinary users. And I know that these are majority of the people listening to this Binance interview right now. So, guys, as we can notice, if we look back in the past, market making was thought to be something that only institutions could do. But in this model driven structure, what does participation actually look like for the ordinary users?
Well, actually, it becomes quite simple for ordinary user to participate in market making right now. The complex aspect of market making, placing order, hedging, and maintaining debt, are all handled automatically by the system in the background. Users don't need to worry about those anymore. What users do is contribute MUSD into the liquidity pool, providing liquidity. With real trading activity taking place every single day, transaction fee spreads and some debt accumulation are naturally generated. The system then distributes the corresponding share of the profit based on the liquidity a user has contributed in the form of MQT or MEXQuick token.
All right, thanks for that explanation, Max. And I would like to add more because this whole shift is not about like one institution or one trader choosing AI, right? But it's the market structure itself that's evolving to a point where automation becomes the only, would say, viable operating method. And when the core of market making becomes model driven, to be honest, the industry naturally start to open up in a way that were never possible before. And 100% like that bring us to a really exciting part of the discussion, the role of the ordinary user, because historically, market making has always been seen as a closed door activity. But you needed massive capital, proprietary model, and even the could say trading risk or the round the clock operation. So retail user were simply not the part of the world. But now, with model-driven liquidity system, I believe the entire framework has changed. So instead of like retail user having a place order or manage complex inventory risk, they are able to participate at the infrastructure level, which is very crucial. They contribute liquidity, the model, do the heavy lifting, that is debt management, hedging, risk balancing, and eventually like fee routing. So that's my take on that. Yeah, thank you.
Thank you, guys. Those are really wonderful points, and it's really fantastic to hear this insights, this explanation from the both of you guys. Considering that, once like we mentioned, majority of the people listening to us are what we label as this ordinary users, and we love, visualizing to them what participation actually looks like. So thank you guys for that. Now, now that we have a clear framework of the market making structure, let us now dig deeper into another point, okay, guys? Since the execution part of the market making is fully model driven, right? Like we discussed, it has core functions like market depth and the risk balancing. It is all handled by the system, right? So, of course, in relation with this, to give more clarity to the people, we would love to ask a more critical question. So, Blink and Lovely, in this new market making structure, why did you choose to use MQT as the method for value transmission and incentives? And also, along with this, what role does MQT play in the overall system?
See, in our system, the positioning of MQT is very clear. It serves as a value accumulation pool for the entire MEXQuick liquidity network. The real value generated by daily transaction, debt filling, and a structural accumulation on the platform is ultimately mapped on MQT. To put it simple, MQT captures the heartbeat of the platform. The more active the market is, the stronger this heartbeat becomes. The larger the ecosystem grows, the more natural the demand for it will be. I want to clarify one point here. You see, MQT is not a functional auxiliary token, but rather the core platform token of our ecosystem. It will be used for free discount, ecosystem access, and market making weight. And eventually, it will also carry the value of our external expansion effort. As for external liquidity, we are outlining this in our white paper, and we will proceed with the integration of EEX and CEX listing process as planned. This isn't a last minute decision. It's part of an ecosystem overall design. MQT follow a decreasing issuance model. The further we go, the fewer will be released, and the token available for circulation will become increasingly scarce. This means the MQT you earn now by participating in market making is essentially a long term certificate that looks in your share of the ecosystem growth. You think this is as a phase, as a cheap accumulation period before MQT enter a large scale circulation. We want users who truly provide liquidity and participate in building the platform to receive not just one time reward, but a share of long term value that will accumulate as the ecosystem continues to expand. In other words, MQT carries the future growth potential of the entire ecosystem, not just the short term fluctuation of the current market.
Right. Thank you so much for that detailed explanation, Mr. Blink. And before we go deeper, guys, I want to highlight something important for everyone listening. That, guys, now that the market making execution is fully model driven, right, the value layer becomes just as important as the liquidity layer. So once the system takes over depth, hedging, and risk balancing, the question naturally becomes like, how do you channel the economic output of this entire engine back to the user who supported, right? And that's exactly where QT comes into the picture. So when I find, like what I find particularly interesting is that is this in this new model-driven landscape, the token is not just as a reward mechanism. Actually, it's effectively the store of value for the entire liquidity network. The fact that MQT maps all the data generation, trading volume, and even the structural growth into a single value index give it like a very different role compared to the typical platform token. And I like the analogy you use, Mr. Max, that MQT, being the heartbeat of the system. It's a perfect way to explain this. When the market activity increases, the heartbeat strengthens, right? And even when the ecosystem expands, circulation demand grows, or organically. And when comes liquidity is in added, the entire system pumps value back into MQT core, right? So yeah, people just be the part of our platform. I'm like, it's a really incredible utility token. So I'm like, take a note on that, learn more about it, to follow all our social links, and you will get first-hand update over there in regard of that. Yeah.
Thank you so much, lovely, for that, Adolf. Thank you as well, Blink. I mean, from those explanation you just gave us, guys, the role of MQT is now very clear for us, and we love the term that you coined for it, like the heartbeat. That is a very amazing analogy for it. But of course, also like to follow up with an extension of this question. So, of course, as MQT continues to grow in importance within the ecosystem, it being the heartbeat, right? What will be the future direction for MEXQuick's ecosystem expansion? How do you envision this system evolving over time?
Our future direction is still centered around one key word, which is liquidity. Strengthening the stability and responsive of the market making system as the user number and trading pairs grow. We will continually optimize the internal matching engine, depth filling, and automated hedging logic. Assure that the system can still deliver a stable experience, even at a larger scale. See, number two is expanding more structural product. Product like a short-term derivative and ticket model are lightweight, but we will gradually push forward with feature upgrade in the perpetual market and also introduce more structured contracts suitable for automated market making. And number three, opening more ecosystem entry points. Whether it's for fee discount, not waiting, governance voting, or future use case in payment system and partner networks or whatever it is, we will ensure that MQT generate real demand across a variety of area. Last one, external liquidity and circulation. We will follow the roadmap in our white paper for the listing process on DEX and CEX platform, enabling MQT to exchange value in external market rather than just being in internal token. Our goal is not to create a short-term project, but to build the concept of an automated liquidity system long-term, making it a fundamental infrastructure that user, partners, and even industry participants can rely on. In this process, MQT will take on more and more function related to value mapping, truly become the value hub that drives the ecosystem.
I totally agree with you, Mr. Blink. I'm like, thank you for laying that out so clearly. I really like that everything still revolves around one central concept, that is liquidity as infrastructure. And like when you think about it, the moment MQT becomes the value hub of the network, the natural question maybe come in our listener minds that where does this ecosystem go from here? And your answer shows that the team is not just scaling feature, but you are scaling the entire liquidity architecture. And what stand out to me is like how holistic the explanation strategy is. I'm like, you're not only reinforcing the internal mechanism, but also like to improving that creativity, optimizing hatching logic, and even enhancing the matching engine, but also one important thing, building outward layer that make the ecosystem more usable, more open, and even like more connected to the broader market. And I think the structured product angle is especially very important for our listener. Guys, automated liquidity system historically like started with simple swaps and pool, but the industry is clearly moving could see towards a deeper product that is ticket, eventually more sophisticated on-chain derivatives. So by aligning these with model-driven market making, I believe MaxQuick is not just adding feature, but you are setting the stage for like a full stack liquidity network. So yeah, really appreciate it. Thanks for that.
Thank you.
That was impressive, guys. Once again, thank you for making the point very clear, very enlightening for the audience. I mean, now we know that, like you guys mentioned, it's like the value hub, right? Knowing that there is a great focus on liquidity as well, because that is one of the most important thing in the space. So thank you very much, guys, for explaining that to the people. And of course, thank you for all of your detailed answers, guys. Actually, we covered a lot of grounds just from those previous questions, right? From the market making structure to MQT, and even looking ahead at the future ecosystem. We now have a pretty complete understanding of MaxQuick's overall framework. But guys, the questions did not stop there, because up next we will be moving into the audience interaction segment. Actually, guys, we've received many questions from the community, from traders, and even industry watchers. And for the purpose of this AMA, we have selected a few of the most representative ones, and we'd love for you guys to share your insights. Once again, Blink and Lovely. So, are you guys ready?
Ready when you are.
Okay, wonderful. Love that energy. So, the first audience question that we have gotten here is many users are asking, since the platform has a system and the capability, why doesn't it just act as a market maker itself?
Of course, the platform has the ability to act as a market makers, but regulated platforms should not and cannot do this. The reason is actually very simple. The platform's role is to provide the fair and transparent market environment, not to enter the market as a participant itself. If a platform is both responsible for matching orders and also directly market making, accepting user order and profiting from price differences, it essentially put itself on the opposite side of users. This is the classic counterparty model in the industry. So we don't want that, and nor we are also allow that to happen in the system that become this way. Market making and other matching must be kept separated. This is a fundamental rule in the industry. You can think of like this, okay? A platform cannot be both as a referee and a player in the same game. The referee manages the match. The players participate in the match. When these two roles are mixed together, the game is no longer fair. Therefore, in our structure is very clear. The I'm sorry. Okay, the matching system only handle order matching and doesn't touch user orders. The market making system is responsible for providing liquidity and stabilizing market depth. User provide a stable amount of liquidity. The system automatically handle hedging and balancing action behind the scene, ensuring that the platform and user are never on the opposite side. With this clear division of roles, the platform remains natural, the system is automated, and user can participate with low risk. This ensures that the entire market structure remains healthy.
All right, I think Mr. Blingmax already answered it perfectly. But yeah, guys, one thing I want to emphasize is that the market infrastructure and even the market participation must remain separate. The platform responsibility is to ensure, could say, neutral, transparent environment that is accurate matching, fair execution, and the reliable, could say, settlement. And if the same platform were also quoting prices or taking like a spread or like competing with user in the order to book it, it would create like a full built-in conflict of interest, right? So we have seen why this matter cause in traditional finance and in like many older crypto exchanges, the could say counterparty model caused massive trust issue, right? But user never knew if they were trading against real liquidity or the platform itself. So by drawing a clear boundary, I think Mr. Maxwick avoid that trap entirely. And I also appreciate So, like how you explain the could say division of role, the matching engine says purely neutral, and even the model-driven market-making system that provide depth and structural stability. So, yeah.
Thank you very much, guys, for that answer. And I think that was a very simple way to put it for the people. I mean, Mr. Blink also mentioned like an analogy, right, with the referee, the players, right, in a basketball match. So thank you very much for explaining this very simply to us, and lovely for emphasizing, the important points on Mr. Blink's explanation. Now, we've got another question coming in that everyone is curious about. So the second question we've got coming from the audience is, where do the profits from market making come from?
Well, the source of profit in market making are actually very transparent and can be broken down into several categories. One is transaction fees. See, every time real transaction is completed, it generates a transaction fee, right? This is the most basic and stable revenue source in a market making structure. Number two is spread and depth filling. Whenever there are buy and sell orders, some price differences naturally accumulate in the order book depth. The system captures this structural profit when it fills depth in the market. Number three is product structure revenue. For product like ticket contract and the entrance fee that were originally platform revenue now flows back into the market making system. This add another layer of profit generation. Number four is net value after matching. When a larger number of user buy and sell order offset each other, the remaining net risk is automatically handled by the system. This process also generates a stable source of structural profit. And the last one is number five, the common commission rebate elimination. This is something many people overlook. We eliminate the traditional rebate system used by exchanges. Traditional exchanges return part of the revenue to agent or affiliates, which become a significant fixed cost. But we decide to completely eliminate this commission rebate and instead funnel the funds, and that would have gone to affiliate directly into the market making pool, where participants can share it based on their contribution to liquidity. So strictly speaking, we are not cutting the profit. We instead consolidating and redistributing transaction fees, spread accumulation, entrance fee revenue, net value from order matching, and the part of the revenue that will give gone to commissions. All of this is combined and then redistribute to those providing liquidity in a market. This uh, this is our way or market making profit structure in more complete and healthier than traditional platform.
All right, that's commendable. Beautifully explained, Mr. Max. Thanks for that. And also, I want to highlight something really important for everyone listening today, that the profit sources you listed are not invented by MEXQuick, but there are the same fundamental revenue stream that the institutional market makers and exchange rely on. And the difference is that in this ecosystem, that those profit are redistributed back to liquidity provider instead of being absorbed centrally. Yeah.
Thank you very much for explaining that very well. And of course, we'd like to thank Mr. Blink for being really transparent regarding, where the revenue is coming from and how it is being distributed back to create this like a circular value inside the platform. Thank you very much, guys. Thank you as well, Lovely, for that add up. Now, we've got the third question coming in, a very interesting question because as we have discussed from the previous Q&A, MQT is your core token, right? And many community members are very interested in the listing timeline. So, the third question from the audience is asking, can you share with us the current progress of its issuance and when do you plan to have it listed on exchanges?
You see, regarding the listing time, we can confirm the following. The technical issuance of MQT will be completed between January and March next year. This is a necessary step for the token enter the circulation system, and it includes process like minting, cross-chain mapping, and the liquidity pool construction. As for external exchange listing, we will follow the roadmap outlined in our white paper. We already established cooperation intention with several major exchanges, but the first phase of listing will be based on operational metrics such as ecosystem scale and the size of a market making pool and also trading activity. Our estimate is that the first phase of interrogation and listing could start between March and June next year. We are not listing just for the sake of listing, remember that. But instead, we want to ensure that the fundamental layer of the ecosystem is very strong enough. This way, when MQT goes live on external market, its value structure can be clearer, healthier, and more sustainable.
Right, awesome, awesome. And I believe that's a very clear roadmap. And I think the community will appreciate the level of transparency here. Guys, listing are always a hot topic, right? And many project rush into, could say, prematurely. But yeah, Mr. Brigham, like you have explained, your explanation shows that the platform is really like taking care about the community, the first approach rather than high first one. And which is exactly what the long-term ecosystem need. And also, yeah, people be ready for the listing, be ready for other major update. A lot of things are coming soon in the ecosystem. So yeah, I'm like keep an eye on all the social links, and you will get I'm like those milestone update over there.
Thank you so much, Blink, for that. And I think that can actually give the people something to look forward to. You know, that kind of heads up that really gives the excitement and thrill. So just like what Lovely mentioned, guys, you can go over to the official social media links of next week. Everything is already posted in our Telegram community already. Let me check. Yep, guys, it's already posted. It is currently pinned in our global chat. So please do check it out. Thank you very much, guys. Now we've got the fourth question coming in, and the fourth question is asking, how is MEXQuick's market making structure different from that of Binance?
Oh, okay. This is a question many users ask, and we can clarify it very clear. First, it's important to acknowledge that Binance has a very mature market making system, and it's one of the top structure in the industry right now. However, Binance model is a typical institution-centered model. Market making is primarily handled by professional institutional team, and users are only in the role of traders. This model isn't problematic; it's just a different positioning. MaxQuick, on the other hand, operates in completely different space than Binance. We are not focused on large institutional battles in perpetual market, but instead we focus on the user experience in short cycle derivative, structured product, and automated liquidity. See, the key feature of short cycle products are high frequency, fast pace, short settlement cycles, clear structural accumulation. These are characteristics that make automated market making system especially effective, and it this structure that allow us to open up part of the liquidity for user participation. These three key differences between Binance and MaxQuick are: number one, the different roles. In Binance, liquidity is primarily provided by institutional market makers. On MaxQuick, market making is handled automatically by the system, and the underlying liquidity can be contributed by users. Number two, different profit flows. On traditional exchanges, most of the transaction fees and spread accumulation go to institutional market makers, with a significant portion of the revenue being used for trading rebates. On MaxQuick, hmm, we completely eliminate the rebate system, and instead we funnel the revenue that will have gone to affiliate or agent into the market making pool, which is then redistributed to user who contribute liquidity based on their shares. And the last one, number three, different product structure. MEXQuick has structured contract than Binance does not have offer, such as ticket contract and written contract. These are unique model exclusive to MEXQuick only. The entrance fee and the structural accumulation from this product being additional stable value to the market making layer, which is something institutional market making system cannot capture.
I totally agree with you, Mr. Blink, and that explanation really helps to frame the conversation in the right way. And honestly, guys, like a lot of user naturally compare every platform to Binance because it's the industry giant, right? But you have clarified, is that the goal or design philosophy, or could say the participant role of Maxwell is fundamentally different. I think that's the key point. Binance is optimized for institutional liquidity provision, while driven liquidity participation, and these are two completely different worlds. Yeah.
Different.
Thank you so much, guys. That's a very fantastic explanation, as always. Once again, thank you, Mr. Blink, for going to the full details because, like you've mentioned from the very beginning, this is a commonly asked question. And I believe it's very important that we discuss and clarify this on this interview. Thank you very much, guys, for that. Now, of course, I think I just got one last question for this AMA. So, guys, I think the perfect way to wrap things up in our AMA for today. This question is now coming from my end. Okay, so, Mr. Blink and Lovely, looking from a future perspective, what do you think is the real value of joining MaxQuick's market making right now as we speak?
If we look at Max Quick market making from the future perspective, what's happening right now is not just a feature, not just a product, it's a phase. In the blockchain industry, there is unbreakable rules. Every ecosystem, when it begins, goes through a genesis phase, the toughest stage, the most demanding stage, but also the stage with the highest value density. And today, MaxQuick is exactly in that phase. Why is market making especially meaningful right now? Because MQT is still in the production period and it's not renewable. And the total supply is fixed. The emission decrease over time. Every MQT produced right now, every day, every minute, is a part of the supply that will never be created again. What you get from market making today is newly generated supply. In the future, if someone wants MQT, they will have to buy the existing supply from the market. That's the difference. Right now, you receive it. Later, you must buy it. And the MQT you earn today is not an extra bonus from the platform. It comes from real economic activity, the actual trading activity of the ecosystem, and accumulation of the membership model, and the reallocation after removing trading rebates. All these forces are converging at this moment. These three layers of value will still exist in the future, but they will never overlap this strongly again. Once the emission curve enter the later stages, the market making pool will shift into a stable, market driven mode. The platform will return the temporary boost yield back to a normal long term ratio. More stable, yes, but never again as concentrated as today. This is not the ecosystem become worse. This is simply the natural path every project takes from 0 to 1 and from 1 to 10. The MQT you earn right now is essentially securing your position in the future ecosystem, not just a short term return. As the ecosystem grows, and trading volume increases, new users will still join market making, but they will receive stable yield of a mature market. while you receive the Genesis phase allocation. These two are completely different. So if you ask me what is the value, well, the value is this. In the future, everyone will participate in the ecosystem, but only the people who join right now can be called Genesis contributors. And this is identity will never appear again.
Awesome, Mr. Blink. That was incredibly insightful. And honestly, I think many people listening right now finally understand the bigger picture behind what's happening here. What you just described is not about like participating in a product, but it's about like participating in a moment, right? And most ecosystem in Web3 only realize after the fact that they lived through Genesis phase. People look back years later and say, I wish I had joined when the emission curve was low, when participation had multiple effect, and like when the system was still like shaping its foundation. But here, you are, I'm like explicitly telling the community this is that phase that like this is the one-time window before the ecosystem become mature and stable, and that makes all the difference. A few things you said really stand out here. First, the idea that amplitude today is not just a reward, but it's a unrepeatable supply. Other than this, people must have to buy it. I'm like, this is the kind of asymmetry that only exists in early phase ecosystems. Second, the fact that the today's amplitude come from real economic activity, that is stating volume, structured product, and reallocated revenue. That means users are not benefiting from artificial inflation, but they are receiving the output of a real engine. So yeah, thanks for highlighting those points. Really appreciate it.
Thank you so much, guys. So I think that was something very attractive and very convincing for all of the people tuning in right now. Thank you so much, guys, for inviting them to become a Genesis contributor as early as now, as early as they're hearing this AMA, as early as they're participating on this AMA. So, you guys heard it, okay? The main perks of becoming a Genesis contributor and the perfect timing. On becoming a Genesis contributor is by joining right now on this AMA. So I think guys we're still very early on this. You can check out all the social media links of MEXQuick and you can see and learn everything from there, guys. And of course, start participating and joining in this ecosystem. So, once again, Blink and Lovely, that was a really excellent explanation. You know, from your perspective, market making is not just a simple feature, but it's a phase based opportunity within the ecosystem. And I especially agree with what you guys just said that in the future everyone can participate in this ecosystem, right? But only those who join now belong to the Genesis phase. So I think this truly reflects one of the core principles of the Web3 industry, and that is the early participants they secure a position while the later participants they enter a mere market, right? So thank you very much, guys, for explaining this clearly to us and helping everyone to understand the relationship between market making, liquidity, token emissions, and even ecosystem cycles. So, yeah, this has been truly an insightful AMA. I think that wraps up today's AMA as well. Thank you once again, Blink and Lovely, and thank you to everyone who joined us.
Thank you so much. And thank you everyone who already joined us. Thank you, Lovely. Thank you, host. Well, I'm really glad to be here again with you guys.
Thank you very much as well, Blink. So, Lovely, any closing remarks for the audience?
Nothing much, but before we conclude, guys, I just want to say that like what we have discussed today is not just about the product, but not token or yield, but it's about like timing, positioning, and understanding like where values truly created in an ecosystem. So it's worth watching. I mean, like MaxQuick is entering a phase that only happened once in a project lifetime, and everyone here today has the chance to be the part of that foundation. So don't miss out this incredible opportunity, guys. Yeah, and also thank you so much for your great hosting, Katie, and yeah, you are always great, Mr. Big Max. Thank you so much for that explanation. Yeah.
Thank
Thank
you so much for your advice.
All right, thank you very much, guys. And this has been truly an insightful interview. So I hope you guys can check out all the social media links of MEXQuick. Join this ecosystem as early as now and get yourself the identity of becoming a Genesis contributor. So yeah, that's all for today, guys. And bye bye for now. All the very best from MEXQuick. Thank you.
Thank you. Bye
All right.
bye.
Thank you, too, guys. Have a great day.
Have a great day.
You too, guys. Bye.
Bye.